All right. The next concept now is how do we really trade this thing called forex? How do we trade it? Because a businessman will be like, how do we make money from it? Now, commonly we have been taught that when the market pull back into this zone, okay, when it is an uptrend, it pulls back into this zone, sell off. Okay. Now it also pulls back, and since it's an uptrend, it pulls back into another zone, other block or fair value gap. Buy it. These are terms we already know. Okay, trend line traders will be like, okay, once it pulls, touches, first touch, second touch, third touch, buy it. This is what we all learned. Okay, first touch, second touch, third touch, you buy it. This is an uptrend. Now I'm going to change your mind and change your the way you see forex. It's better I tell you the truth so that you face reality. Okay. Now to face reality is this: you cannot get a market that is working like this. Okay, so just know it and know peace. Most times, if you want to draw trend lines, you see that market is not even connecting from those 3 points. You can draw a trend line. Let's say something like this: first touch with touch, second touch with touch. This one will come and takes people's stop loss out, okay, and then do what? Buy. You have seen this case severally. Most of you who have been playing forex have experienced this. They say first touch, second touch. You now connected first and second. You are waiting for the third touch to come, but the third touch came. Instead of bouncing off from here, it first of all took you out, and then you be like, okay, that means you're not going to buy. You now wait for a retest so that the market can retest here. Then after a retest strategy, then you do what you sell. That's what they taught you. But trust me, they will not even sell off. What they will do is they will say come and buy. This is most cases. On a similar case too, I told you that when you have impulsive pullback, impulsive, a change of character, right? That the market most of the time normally does this pullback and continue selling, right? But to shock you, most times what they do is they know that people are waiting for them in these zones. They will first of all do this, which is so crazy. Stop them out, then they will think he's now buying, then do this again, and then start selling. This is the reality, my brother. Okay, but don't worry, I want to help you. It's a way of saying thank you. Actually, I'm saying thank you for being part of Chemis Frank throughout 2024. Is a way of saying thank you. This video, I don't know how long it's going to stay on my YouTube channel, but for the moment, it's going to stay on my channel. People that watch it will benefit from it because this is just a factual truth. Okay, so in reality, there is a tool I use because the real essence is how do we know that the market has finished pulling back? That is the question. So that we will buy if it's an uptrend, right? So this is an impulsive move. Let me just shift this to the side. A pullback, impulsive, a pullback. So the question is, for instance, Mr. Michael. Mr. Michael wants to buy and make money project. The question is, Mr. Michael will be like, how am I sure that this pullback is true from this zone? How am I sure? Mr. Michael will be confused. Or how am I sure that this market will not even come up to this level? Or how am I sure that this market will not even perform change of character? The question is, where will this pullback reach? Then I can start buying. That becomes the problem. That becomes the problem. Now, to solve this problem, there is a tool I use. Most traders use what we call fair value gap or order blocks. But to cut the long story short, I have discovered a mechanics. It is my style of trading and it works perfectly fine. I use Fibonacci retracement. A tool called Fibonacci retracement, once you use it, you're going to make a lot of profit from the market. All right. So what you do is when you have impulsive pullback, impulsive pullback, impulsive. Most times when a pullback wants to start, I have noticed that if you plot your Fibonacci from the recent low to the recent high this way, the market will come and retrace from 618 and 78 level most of the time. So what happens is that the market comes in, tap into this zone, then bounce up. So Fibonacci retracement becomes a guide for us. In between 618 and 78 level, Market most of the time turns from there. Follow this course carefully because I will explain everything you need to know. Okay, don't worry. So this is a break of structure here. So as soon as you got this break of structure, then you delete this, then draw your Fibonacci retracement again from the recent low to the recent high. Okay, allow the market to pull back into this zone, and once it does that, it's going to bounce up. Okay, so we are going to be buying from fib zone of 618 and 78 level. Take profit here, stop loss just 20 pips at most. This is how we trade. But listen, because you need to apply some other things to this Fibonacci if you must make money from this market. Now see, if this market don't want to be an uptrend again, what happens? It changes character to the downside. So this is an obvious change of character. You can agree with me that this is a change of character. So for a downtrend, the same thing applies. Bring a Fibonacci retracement from here, extend it this way, then allow the market to pull back into premium. The same 618 and 78 level, you sell off. Okay, a downtrend you start selling, an uptrend you start buying. So this is a break of structure now. Okay, so extend this. Okay, now this is also another pullback. Where are we going to sell this? We are selling off from 618 level and 78 level. That is a research that works. All right, when the market pulls back into this premium, what happens is it sells off. Okay, sells off this way. So this is a simple way to trade, right? But this is not as sweet as you say it, because most times market will not respect this. This is what we get in reality. Let me clear these drawings. Now they know that we are waiting for them in these premium zones. Take note. Don't be in a rush to make money from Forex, because Forex looks very risky. In fact, it's very, very risky because they are making sure that most people run into loss. So to add more confidence to what you are doing, when you have an impulsive pullback, impulsive, when the market is pulling back, let's say you are bringing your Fibonacci retracement, extend it to this zone. Okay, map out your region. This is it, 618 and 78 level. Okay, now we want the market to start pulling back. Market will pull back, okay, into this zone. With this kind of pullback, please don't buy. Take note, this is called aggressive pullback. If the market is pulling back and you want to buy from 618 and 78 level, let there be a kind of inducement where they have taken traders out before your point of interest. Point of interest is your 618 and 78 level, where you want market to come, so you buy. That's what we mean by point of interest. Okay, so this is what is going to happen. They will come this way, make a kind of double top, right? Then pull back into 618 and 78 level. Now, in this case, you have added one additional confluence to your buy, because some persons were actually buying from here. Look at this. Okay, this double bottom you see here, people were placing buy, so but they did not buy, they just bought little, swept them out, a kind of liquidity, threw them all out. So it is from this zone that you start buying. I will still tell you one other confirmation you need to take into consideration when the market is in 618, but that will be later. Case 2, you have been waiting for this market to pull back, okay, into 618. Now they know that you are waiting for them. What they do mostly is they come into 618, do not buy. They are going to liquidate, use 618 as liquidity zone, okay, then finally crash into the next block, which is 78 level and 100 level. So it is at this last block that you are going to buy. Take notes, okay? This is so simple, guys. When they rush into 618, they did not create liquidity before coming to 618. Allow them to sweep this liquidity which they have generated inside 618. Okay, once they sweep it, please consider buying from this next block. Look at it. This is where you're going to take your buy. Okay, extend it here, take profit. Then stop loss should be 20 pips, just 20 pips, very tiny stuff. Okay, This is it. This is it. Just enter into the next block, then shoot your shot. They're going to buy up to this zone to take profit. Okay. Now, this is case 2. This is another case 3. Let me delete all this. So in case 3, what happens is, let me check if this is recording. Okay, good. Now in case 3, you're waiting for the market to pull back, right? It goes inside 618, even past it and come into that next block. Please do not buy, because they will eventually liquidate everybody, okay, with a weak rejection. What they do most of the time is they come to this last block and close with a weak rejection. Let me do this. Okay, this is the last block. They will not change character. Had it been they close below it, that's a change of character, right? But they will not. They will just come this way and close with a weak rejection. Okay, you know what I mean by weak rejection? When a candle weak out. Once you wait patiently for a weak rejection to be established, please consider buying that pair Euro USD from here. Extend a take profit to this zone. Stop loss is just very close, 20 pips or thereabout. These are 3 cases of liquidity. And you must patiently wait for these things to play out. Otherwise, you want to take loss, because Forex is not easy. Okay? I must be honest with you right now. So, let me give you another scenario. What you need to do. Okay. Um, Let us look into internal structures and multiple time frame combination. Okay, let's go into that before I discuss further things you need to know. Let's go.